going on? It's Scott Taylor with San Diego RealEstateHunter.com, licensed in the state of California for both real estate and mortgages with an emphasis on San Diego. You're here to get more information regarding a jumbo refinance, and that's what this educational video is all about. Now, we're going to kind of do a little Q&A. I did another video on the jumbo refinance, and of course, I did a couple other videos on the jumbo purchase mortgage, depending on where you're getting this video, maybe via email or text or social media or site. It'll be like a little bit different. So what I would like to do is answer a couple common questions that I've gotten in, and then maybe I could help relieve some of the questions that you had or some of the things that were in your mind. One of the ones was from last time, and they said, hey Scott, you talked about what a jumbo cash out is and a jumbo rate term. Do you mind talking a tad more about that? So a jumbo rate term is very simple. It just simply means that whatever your loan amount is now, you have an interest rate. So what you want to do is keep that same loan amount and look at lowering the interest rate. That's all that is. A rate term refinance is just if we can find you a better program or a better deal. The other one, a cash out refinance, is something to where you've built up quite a bit of equity and you want to take cash out. It doesn't matter what it's for. You want to buy 1,000 TVs, you can do that. You want to buy a home, you could do that. You want to, or for a down payment. Student loans, or take your kids to college, or for a car. It doesn't matter what it's used for. It's not looked. Now, there could be a circumstance where lenders like, hey, they're taking out 300 or 400,000. What are they going to use it for? But as long as we do a letter, it doesn't really matter. Another fantastic question is, Scott, you talked about that you work for a broker and you deal with wholesale lenders. What's different between going to you, or how do you fit in, versus if we went to a credit union or a bank? And that's a great question because that's a very valid question. So if you walk into a credit union or bank and you sit down or you call or you go on their site and you look at rates, or you look at, like if it's a 30-year fixed or a 5-1 ARM or a 7-1 ARM or whatever it is, that's just with them. Number one, you're a retail client. Right? It's not wholesale, you're just walking in. You're a retail client and you only deal with their products only. So the difference between me is I work for a broker and we go through wholesale lenders, and we have a lot of different wholesale lenders in the state of California that we use. Now, when you submit with me, I can take it to any one of those wholesale lenders. So some will have for better credit scores. Some will have just better rates in general. Some will, depending on your credit profile, maybe you need higher debt to income ratio, or maybe you need more reserves or less reserves. Well, based off of you, then we can take it like wherever is best. So it's not just one place. I can shop all these lenders to find you the best deal. So it's completely different. One's retail from one types of products, another one's wholesale with a lot of different types of products. So, Scott, I hear a lot of things on TV or on the internet as far as no cost refi. So why is it you talk about closing costs if there's things called no cost refi? Now, I'm not sure where you saw this, and of course, if they do say something like no cost, it should probably be in quotes or in asterisk. Guess what? If you do any mortgage loan, there's going to be costs, right? There's going to be lender fees. There's going to be appraisal. There's going to be escrow fees, title insurance, et cetera, et cetera. All of those are fees. It could happen on every single loan. Now, we can debate if you already bought the place and got title insurance and you're in a refi, why should you have to get title insurance again? I hear you. So we could debate that stuff, but that's something separate. So yes, there are going to be closing costs and fees. So then it's just a matter of how do we structure those fees, right? And there's really three main ways. One, you pay it out of pocket, means from your bank account or money market, or sell some stock to pay for whatever it is. The second option is we put it into your loan. So maybe your closing costs, to make up a number, are $15,000 if we add up all your closing costs, et cetera, then you could put that into your loan, okay? Or the third option is called a lender rebate. Now, a lender rebate would just mean, and I'm gonna make up numbers to keep it simple. Let's assume that we qualified you for a jumbo mortgage at 4.5%. We might do it at 4.75 or 4.875. That difference, right, 4.5, so that difference there, there's money on the back end called lender credit, or like a lender rebate, and we use that to pay your closing costs. So there's three options right there. Hey Scott, do you mind talking about, some lenders talk about prepaids in closing costs and some just talk about closing costs. Can you explain that? So when I talk about, and this is a little bit more into it, a lot of times when you deal with lenders and they say, hey, here's your closing cost, then come to find out, because it's not a true cost, you have an escrow impound account, right? For your prepaid interest, prepaid property taxes, prepaid fire insurance, maybe prepaid HOA depending when you close. Guess what? You got to pay that. So technically that's your money. It's not a cost. So a lot of lenders don't include that. For me, I like to say things like cash to close. I even just mix it and say, that's how much your closing costs are. I just like doing that. At the end of the day, it's like, how much are my costs to close? And that's what I do. Now, keep in mind too, it can vary a lot. Now, not all of it goes, hey Scott, it all goes to you or all goes to the lender. That's not true. It'll show you everything on the statement. But one thing for instance, some months you might only prepay property taxes of 2 months. Some months, depending when we close, this is per state California law, some months when we close, it could be 6 or 7, right? So that's a big difference. If your property taxes are $1,000 a month and you only owe 2 months, that's $2,000. If you owe 6 months, that's, what did I just say? $6,000, right? So that's a big difference. So that's something to keep in mind as well. Okay, cool. I just wanted to answer a few simple questions. If you had any for me, of course, call me, email me, text me, ask me those questions. Maybe I can do a future video. Now, where do you go from here? If you wanted to get started with me, you would go online to scottsblonapp.com. It takes about 20 minutes or less. You fill that out. I get a text alert. I'm going to run your credit. Based off of that, I'm going to say, hey, you are looking pretty good. Your online application is looking pretty good. We have your credit score is looking pretty good. Your debt's looking pretty good. Then I'll send you an email with, we need these supporting documents: driver's license, social security card, last 2 years tax returns and W-2s, last full month's paychecks, last 2 months, full months, bank statements, all pages. If you have anything like 401k, stocks, bonds, etc., that. Depending on what your credit score or your credit report says, we might need Chapter 7 or Chapter 13 or short sale foreclosure, child support, alimony, etc. Once you upload that via my site or send it to me via email, we take it right in. We process the loan very fast. We see which lender is the best one to go with based off of your credit profile. We send them the loan. We open our own in-house escrow. We can do that very quickly. And a lot of times we can close jumbo loans in 21 days or less. That's all I want to talk about today. Once again, go to scottsloanapp.com to get started. And I look forward to earning your business soon.